Many times, the price of some instruments will start impulsively moving in one direction with little to no pullbacks. In my first years of trading, I was afraid of opening a trade and getting stopped out for trying to have a small stop loss and higher risk to reward ratio. And I was usually pissed off as a result of not taking action and missing such a massive displacement. So I will explain you the why behind this price action and how to enter a trade following the same direction. Most of us are intraday traders and scalper, therefore we spend most of the time looking at the 1 minute chart, and the problem with this time frame is that if you don't have a proper way to retain the information from the higher time frame, it's very easy to think that these type of moves are random. You don't need to worry about this because there are ways to trade and anticipate this kind of moves. These are different examples of recent analysis I did for my mentorship, where I pretty much hit the nail on almost every analysis, and we have been catching a lot of these moves. So the question is, how do we find the setup and take a trade? Let's say that we did our analysis for GBP USD and we are anticipating this move to happen from the weekly chart. How can we make the most of this move? By catching it from a lower time frame. When we want to take a trade because we are expecting a daily expansion to the downside, we first need to figure out if between where price is now and the target, is there any imbalance that was left unmitigated. There was an imbalance here, but as you can see, price came back to tap in and then kept moving higher. There was a tiny little imbalance there. Price already came back and filled that imbalance. The other question is there any higher low that needs to be mitigated? Here we have a clear uptrend, higher high, higher low, higher high. And you can see how price tried to push higher from this last higher low, but failed. It didn't make a higher high. Therefore, we can consider this level to be mitigated. The mitigation process is very complex. I explained it on another video. But in simple words, price touched this level and then went ahead and grabbed liquidity on the opposite direction. Now this is important because when we have an imbalance or a market structure swing that has already been mitigated, there is no need for price to stop when it's trying to go lower. Now the next step is anticipating with a higher probability if the next daily candle will open and just print a nice down candle or do a little bit of manipulation and then push lower. Because based on that, we are going to take a trade. And to properly identify which is more likely going to happen, we need to jump into the lower time frames. I am now sitting on the 1 minute chart and ask ourselves the same questions that we asked before. In terms of market structure, we had this bullish structure. Price tried to move higher from here, from the last higher low, grab liquidity, failed. So this level was mitigated, therefore it could push lower. And then here we face some imbalances. We have an imbalance here, another imbalance here, and one more imbalance here. The first imbalance, since it was very close to the higher low that was mitigated by this move, was broken without any kind of resistance whatsoever. Now the second imbalance, and soon as price touches, you can see we have the mitigation. Now the last remaining imbalance was tapped here, filled, and now price is pushing higher. So we can say that these lows are very likely going to be broken without any kind of support here. During the process of analyzing market structure, we can identify this clear downtrend. Now there is a new daily candle about to be opened here, and we need to analyze now this lower time frame structure. There are no imbalances whatsoever. Everything is mitigated. The last higher low that produced the last higher high was already broken, so there is no real need to stop and go higher from here because everything has been mitigated. So because of that, we can now say that price is likely going to keep on moving lower without producing any kind of retracement. But there is something that we need to take into consideration. If there is liquidity being built, then we can anticipate an inducement before price decides to push any lower. If we take a look at this structure, we can quickly identify that here we have some kind of trend line. We previously had this very trend line and price now is breaking higher. So if we are anticipating a move lower, it makes sense that price wants to induce some buyers before continuing the downtrend. How can we take a trade if price is now manipulating? In simple words, we need to see a displacement with big spread candles with high volume breaking through the consolidation. But that's not it, because sometimes we have that exactly, but price reverses. So what is the missing key to understand if price is going to make another inducement before pushing lower or will just break lower. Well, we can use volume, allowing us to read the effort versus result, but I found out a simpler method is just looking to your left. Even though this level is already mitigated, when price breaks lower, if it doesn't break this low, there are two things that might happen. Either we have a retracement and continuation, or another inducement and continuation. So ideally, we want to see the big displacement breaking through the consolidation and the nearest point of interest where price is working around. Now let's see what happens on this example and how can we take a trade. This is the new daily candle opening. As you can see, price went through this trend line. So far it hasn't broken this level, so the two scenarios are in play. Now, you see what's going on here? One more time, price is building a trend line while falsely breaking the structure once here. So let's keep on waiting because we might have a confirmation very soon. We are breaking a trend line, so there are some sellers being induced here. At the same time, we have a trend line to the upside here, and we also have equal lows. So you can see how I am analyzing the liquidity in real time to absorb and interpret the new information that the market is giving me. So now I know that we have these two scenarios. Okay, you can see how they faked out the break above the trend line. Now they are faking out the break below this low. So the moment we see the price testing the liquidity on both sides of the market is the moment we know we are likely going to produce a bigger move very soon. Okay, we ended up breaking this high here, so there are definitely lots of buyers taking positions. At the same time, even though we have a tiny little break here below the equal lows, this is still considered to be some kind of support level for most people, or at least less informed traders or algorithms. So I'm expecting price now to very likely break to the downside. Boom, we are breaking to the downside. Now, this is the moment of truth. Let's see if we break this low. You see what happened? Just before breaking this low, now price pushing higher again. This might have pushed higher, okay? So let's wait one more time to see if we finally break it. If anyone was looking at this, understanding the smart money concept, would have said, yes, this is definitely going to break, but you see what happened? It didn't. And now we have equal highs. So we are getting closer to have a nice shorting opportunity. Either price takes out this liquidity and then goes lower, or it just simply break. Okay, we are taking that liquidity, beautiful. And if we look to the left, we have a nice little imbalance here where the aggressive sellers had previously opened shorts from. So perhaps price wants to tap this level before pushing lower. Let's continue watching. But first, let's zoom out a little bit. Remember that we are anticipating a daily candle that will move way lower. So any kind of move to the upside, we are expecting it to be only an inducement, a trick. Updating the analysis one more time, we have equal lows here. And now that we are taking the equal highs out, the probabilities of price breaking lower are increasing. At this moment, I am aggressively looking for a shorting opportunity. We have this uptrend, so I would love to see a break below this low with good momentum in order to potentially take a trade. And there we go, we have the very first break of market structure. Here we had a tiny little imbalance, but it was already mitigated. So this break of market structure has higher probabilities of continuing to the downside, and if it actually does, then it might be the move that breaks through all of this. Now, this is the moment where we can take a trade. We can either market execute a short from here with this stop loss. I know it seems like a big stop loss, but remember that we are talking about the daily move that could have 100 or 200 pips, and this stop loss only has 10 pips. And if we want to also have a smaller stop loss, what we can do is place a sell limit with the hope of it getting hits. But if it doesn't, that's fine because we are still already in this trade. So where I'm going to place my entry is above the very first highs of this lower time frame downtrend. The reason is that price moves from external liquidity to internal. So for orange, we just made a lower low. That means that we grabbed external liquidity, therefore these highs are internal liquidity. So if anything, I want to see at least one high getting broken to induce some buyers before pushing lower, in case price wants to retrace. Otherwise, it will just tank. Alright, you see that? Price went, tag me in right above this height, and now it seems like it's trying to push lower one more time. Okay, we got very close to our stop loss, but remember, this high was the one in charge of breaking the structure, while at the same time is the high that induced all of the buyers. So there are buyers trapped here, and these buyers are now going to close their position by shorting potentially and initiating a new wave down. Okay, look at this. This is very important. You can see how price is creating equal lows here. So what's actually happening here is that the smart money is selling, but when they reach this low, till the very low here, they stop aggressively selling with the purpose of inducing other buyers to try to push the market higher. And the moment they encounter the smart money shorts that were open here, that's the moment they should keep on moving lower. So they stop selling to force a retracement in the market. That's the theory, obviously. We never know exactly what's going on, but based on the pattern, we can interpret it. Okay, beautiful. We are now breaking lower, and we just created a new lower low for this higher time frame structure. So what we are expecting right now, ideally, is a continuation lower to at least break this low and potentially these lows right here. As you can tell, we have still a tiny imbalance that I didn't see before here. So there might be some kind of support here, inducement, but we will see what happens. In any case, if I was in this trade, I will take partials here and then let the rest ride until my final TP. All right, here, let's assume we took partials, let's say 30 or 40% in partials here, and now leaving the rest to hit the take profit. And there you go, boom, target met.
And this, my friends, is how you catch the move when there is a smart money manipulation at the beginning of the day. You should subscribe to my channel right now. And while you're here, make sure to check the mitigation video to learn how the smart money dark order floor operates behind the candles.